Let's break down the trends, though, in terms of where we are seeing recoveries perhaps hitting Americans a little bit harder than others with our next guest here. Jed Kolko is indeed Chief Economist, and he joins us now. And Jed, I highlight Georgia because it was interesting to see how that state went. Of course, it's one of those that we saw flipped here. But you have been looking into kind of this red and blue breakdown in terms of where this recovery is at as well. Talk to me about what you've been seeing.
So what we see when we look at which places have been doing better this year and which places are struggling is that this recession has been worse in blue places. And that's mostly because of the types of industries that exist in Democratic and Republican-leaning places. Democratic-leaning places tend to have more jobs in the kinds of service sectors that have struggled most in this recession: arts and entertainment, hospitality and tourism, but also in places where more people can work from home. So tech hubs, finance centers, those are the sorts of places where local businesses like restaurants and services are really struggling because people are staying home rather than going to their place of work and going out for lunch, picking up things, and so on. So it's really the blue places that have struggled more in this recession, even though bluer places are better set up for the future, given a mix of jobs that's more likely to grow, higher education levels, and fewer jobs at risk from automation.
Jed, what about some of the agricultural hubs? You know, we've been talking a lot about how this most recent uptick, while we are seeing a surge across all the states, the Midwest has been particularly hit hard. And that's not an area that, as you point out, is sort of very service heavy as much as it is just more rural areas. What do you see as the economic impact there as we continue to see restrictions placed on some of those states?
Well, the reasons why some places are struggling economically are different than the reason why some places are struggling in terms of cases and deaths. The most important factors for the economic pain is the local job mix. But right now, the strongest factor that helps explain why some places are having a bigger case surge than others is actually temperature. The places where temperatures tend to be more extreme, places that were hotter in the summer, places that are colder in the winter and fall months, that's where we've seen bigger increase in cases. And that's consistent with it being harder to do things outside and greater risk of people gathering inside. So we've seen throughout this pandemic a pretty consistent pattern of where the economic pain has been greatest, even though we've seen a wildly swinging pattern of where the virus has been most severe. First, New York and the region around it, then the Sun Belt, and now the upper Midwest.
And Jed, also, when we think about this, the latest report that Emily was just breaking down, I know you at Indeed, you guys have been tracking job postings for quite some time, looking into that data. And the big question now, I suppose, is this recovery and whether or not this was a fluke kind of one-off unexpected increase in jobless claims, or if this is the beginning of what we're going to see as a second peak here in unemployment claims. Talk to me about what your expectations are, putting in all of what you're just talking about in terms of the weather becoming a huge factor here to consider.
I expect that we will see continued but slow recovery in the labor market. What we see on Indeed is that job postings continue to recover. Job postings pick up. They continue to inch closer to levels that we saw a year ago, but at a much slower rate than during the summer, where there was a much faster rebound off that low point. I expect as some people who are temporarily laid off get recalled back to their jobs, but other people find that their temporary layoff becomes permanent, the remaining unemployment will be more stubborn. Those will be the sectors, the places where recovery comes less quickly, where it's not just about reopening and a rebound, but starting to do some of that more chronic pain that the acute crisis caused.
And Jed, how much of those losses you think are going to continue to be in the services and hospitality sector? We've sort of seen it expanded into government jobs as well because of state budgets really getting increasingly tight. Are those the sectors you're going to be looking to, or do you think this next wave, as Zach described it, is likely to expand beyond those who have felt the most pain so far?
I think the sectors that will continue to struggle most are those that depend on air travel and large groups of people gathering together. hospitality and tourism, arts and entertainment, and sports. Those have been consistently far down in terms of employment. Some other sectors have been able to rebound. Clothing stores, dental offices, hair salons, places that shut down but have been able to reopen and have been enjoying some pent-up demand as people deferred their teeth cleanings and their haircuts. Not me, of course. I did go to the dentist, no reason to go to the barber. But it's really those arts and entertainment, hospitality, tourism, sports that depend on bringing lots of people together. They're in for the longest struggle.